with oil then, global energy demand will increase faster than the rate of population growth through 2050, says the CEO of Kuwait Petroleum Corporation. He also added that demand will peak this decade, which means that there is going to be a requirement of more energy intensity for the population. Meanwhile, to combat the situation in Kuwait Petroleum Corporation plans to increase its production capacity to 4 million barrels per day by 2035 from the current 3 million barrels per day.
Yeah, absolutely. And there's actually a lot of cues that we should keep our eyes on, right? First of all, there's of course the all-important FOMC rate decision. A lot has been said about it, and it remains to be seen how that impacts our market as well as US markets as well. And let's see what that decision indicates. But from the UK, you do have CPI as well as PPI data. And in the Eurozone, you do have consumer confidence data. So keep an eye on all of those data sets along with China's loan prime rates. Now, in terms of corporate action, there's of course the last day to buy Dwarikesh Sugar for buyback, and Paisalo Digital will be trading ex-bonus in ratio 1:1. So keep an eye on those two counters as well. Now, HUDCO board will be mulling fundraise plans, and that is another counter that will remain in the spotlight. Now, the lock-in period also ends for Moti Sons Jewelers as well as Muthoot Microfinance for 3% each. So keep an eye on both those counters as well.
Well, yes, and with that, let's kickstart this morning with some important global macro news then. And the yen tumbled to a 4-month low after the historic and widely anticipated decision to end its negative interest rate policy. While on the other side, the dollar strengthened ahead of the much-awaited rate decision from the FOMC, which is set to take place today. Analysts say that the market has taken it as a green light to increase the short yen positioning that was already in place. Now, given the forward guidance from the Bank of Japan that was fairly cautious and not enough to draw further hawkish repricing in the Japanese market rate, we also caught up with Peter Cardillo, the chief market economist at Spartan Capital Securities LLC, about the same. And here's what we got from him. Listen in.
If inflation should really rise above that 2%, then obviously not far in the future distance, we'll be looking at the first rate hike. But again, it'll be somewhat minimal because we're back at zero. Of course, quantitative easing is all done with. And so I think the impact on the Japanese economy for now is not going to be all that negative. One of the main culprits of negative zero rates for 17 years caused the value of their currencies to plummet against the dollar. We still see a strong dollar, but that all could reverse if and when they begin to raise interest rates.
And all eyes are definitely on the two-day Federal Reserve meeting. Experts believe that the Jerome Powell-led central bank will maintain interest rates unchanged, with significant attention on the dot plot. Gaurav is joining in with the snapshot on that.
Well, yes, FOMC meet will conclude soon and interest rates are not expected to change according to the market expectation, but they will definitely keep an eye out on dot plot. Because why? During this meeting, they are not expecting any kind of changes in terms of GDP projection or unemployment rate, but they will be looking out for cues where interest rate changes will happen in the coming time. So why dot plot is important is that if we talk about inflation, we have seen some kind of deceleration happening from in terms of inflation from the peak levels, but the recent data has shown that we have seen some kind of acceleration re-happening in 2024 in US. The current concerns about re-acceleration of inflation is basically short-lived according to the industry experts, and they believe that the projection for inflation are not going to be changed from the Fed. But what they expect is that any kind of negative surprise is substantially going to be a risk across the asset markets. This could also decide the rate cutting cycle for the next months, and this will also result in the central bank to deviate policy stance from the market's current pricing. And on back of this, they will be definitely watching out for the dot plot because this will estimate when the rate cuts will happen in 2024. Apart from that, they are also anticipating the dot plot to feature 25 bips rate cut, 225 bips rate cuts during 2024 versus what they were expecting at 3 rate cuts during 2024. So definitely it is worth keeping an eye out on how the dot plot turns out for the investors as well as for the market in the coming conclusion from meeting.
Well,
if you like this video, then like, share and subscribe to ET Now.